Good afternoon, everybody. It's 11:15, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating this session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. We just had the release of the crop production and WASDE report. A couple of interesting notes. Soybean yield lowered to 51.7. That was against 53.1 for October. The average guess was looking for a number closer to 52.8. Corn yield came back 183.1. That's against 183.8 for October, and the average guess was 183.7, so a little bit lower there as well. Looking at ending stocks numbers for corn, we got 1.938. That was lower than October and lower than the average guess. Soybeans at 470. As a result of the lowering yield, we did see a sharp decline there in ending stocks, and wheat came back at 815, which was higher than October of 812 there. Dustin, maybe a few thoughts as we've looked here and had a couple of minutes to digest the report, and then we'll throw it around the room.
Yeah, so, obviously pretty big drop in bean yields from expectations. And, that's what we were hearing anecdotally as well. And it turned off dry, obviously, during the heart of that time frame. So, yes, not surprising to see that. Markets reacting favorably. It is a good reminder, however, though, that even with this drop, we still have a fairly large carryout projected for beans. So, we're only up 5-6 cents on the day, even though we went from looking at well above trendline yields to actually a below trendline yield. And yet we're only up 6 cents on the day. We still do have a decent sized carryout. The other thing I think that might be holding that back a little bit is the real is falling on its face today. The December real is down 31 points, 17.25. So I think that might be why we're actually seeing a rise in the rising corn over beans, or a drop in that bean corn ratio.
Very good. Justin, as you looked at the report and had a few minutes to digest, what are your thoughts as we head into the weekend here?
Yeah, just, corn demand didn't change at all. So we talked about that a little bit. I think people, trade that the export number will come up a little bit with what we have on the books, but, government's slow to change anything there. Soybeans, they actually cut demand 40 million. They cut exports 25 million bushels. They cut crush 15, which I'm pretty surprised at. We've got really good crush margins. We've seen record crush month in, month out. So the margins are there, the capacity's there. So that's an odd one to me. At the same token, they don't change meal demand at all. So you're kind of like, well, we're getting rid of the oil. We got a tight oil carry out. They lowered that from 1.787 billion pounds down to 1.536. So they didn't really change demand in anything. They just lowered production from crush, except for they kept the same carry out in meal. So, the numbers don't really add up when you look at the individual components of crush. But sometimes they just use meal to make it fit. So that'd be my only thing there is I don't think crush demand is going to go down much. Exports made sense with the pace we've been on. Now we've recently been picking up, but with the crops that they're projecting in South America, you can argue that, that could come down more. To Dustin's point, we've got still a big bean carryout. We're going to have to see demand really pick up in the export market, to create a bull market from here. That usually would happen with a South American weather problem. You could argue some China, some Chinese deal with, Trump back in office, something like that. But those are the biggest things that stood out to me was just the soybean complex.
Yep. Yeah, just talking to, other thing that kind of stands out too, how we're getting to this corn number. We've seen a lot of volatility in the numbers. And, one thing that doesn't necessarily make sense as much to me is they dropped Illinois yield again to 218, and they raised Indiana up to 209. So it's just another kind of point in how they're getting to these numbers. A lot of these are still yet to be determined when we finalize them in January. So how we end up getting there, I think the market's kind of trying to tell us it's not getting enough flow for corn right now. We're seeing extremely narrow corn spreads and wide bean spreads. I think that kind of shows up on the balance sheet as well too.
Yeah, that number's kind of odd to me too. You know, the spread of only 9 bushels between Illinois and Indiana doesn't really jive with what we've heard. So some of those state by states look really odd. So
Yeah. To your point, is that just them fitting it together? I mean, no rhyme or reason, obviously.
yeah, that's always been a tough one. I mean, how many years we've seen Iowa's in a horrible drought and Illinois is good, and then somehow they end at the same yield. So I've never really understood the state by states, but
Ben, you got a few comments to take us to the weekend here?
I think it puts the onus on January report. You know, that seeing the yields go backwards a little bit, is there going to be a further reduction? I think there's going to be a fair amount of volatility within a defined range still. But corn, I don't see anything super inspiring there, considering that we're 45 cents off our lows. Now, maybe we had a kind of a synthetic low with the SEP expiration. I think it's going to take a lot more demand to get corn up to that next leg of, call it 440 to 455 if we were to get there. Soybeans, South American weather, and are we going to see a further reduction in yield on the January reports? We don't get an update on yields in December. Is that correct?
not usually. Usually just rolled numbers.
So just that's kind of what's on my mind. I think it's been a pretty sharp rally. We caught a lot of bean shorts, probably front running the election, thinking that it 1 + 1 = 2. Maybe we've cleared some of that out. I would note that beans hit their 100-day moving average, went slightly through it on the report, and they have since sold off pretty aggressively. So I think to Dustin's point, it's still a pretty hefty balance sheet.
Yeah, so far, I mean, both corn and beans kind of made good technical trades right after the report. Beans went through the 100-day, corn made new 5-month highs, and so far they're failing miserably. So we'll see how we end the day here.
Sure. Any other thoughts here, guys? I know we'll certainly take the rest of the day, see how we close, and have a wrap up in our evening commentaries, and then I'm sure talk a little bit more next week once we've digested everything. So with that, we'll get a quick rundown of the markets. December corn up 3 1/4 right now, 430 3/4. January soybeans are up 3 1/4 at 1029 1/2, and December Chicago wheat is up 1 1/4 at 572 1/2. We appreciate everybody that tunes in on a daily basis, supports the show. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything AgYield. So once again, thanks to everybody for supporting the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here today, guys. It was a good bonus edition of the War Room. We hope everybody has a great weekend, and we look forward to talking again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.